And it's interesting, that's Bitcoin 101 right there from Christy I, by the way, for all of you out there. Now, Michelle, one of the big rallying points has been institutional investors, and that's how we hit that record high. How are they reacting and playing this as we've seen the drop due to this news?
Well, first off, I want to say, yes, Christy really does wrap it up great. So I just want to jump on that because hot off the press in talking about institutional investors is Michael Saylor saying that he spoke with Elon Musk, and now they're looking into making Bitcoin mining in North America more environmentally friendly. So in the last seconds before the close, you saw all the cryptocurrencies rally on that. But just stepping back a little bit over the weekend in the most recent liquidity crunch, essentially, which is what it looked like to us, is that you had the institutional investors sort of calm and quiet through all of that. If anything, you had somebody like Cathie Wood come out and basically double down on her bullish stance in Bitcoin, saying she still thinks it's going to 100,000. And so the media jumps, of course, on whatever trend is happening. But as far as the actual institutional investing, they're there. And then today, Goldman Sachs came out and said that they actually think that it's a very investable asset. So you got to really ignore the noise and look at these big dip opportunities, I think, as buy opportunities with a much tighter risk rather than suffering from FOMO, which a lot of people do all over the market, but particularly in the cryptocurrency.
And Christy, beyond what Michelle just mentioned there about that late rally right before showtime here, why else have we been seeing that rally in Monday? You know, after things dropped to that $32,000 level on Sunday afternoon, it basically rallied back to about 38,000. Of course, I don't have a number right in front of me to tell you what it is at this moment. But is this about buying the dip? And what does it mean really for Bitcoin going forward?
I mean, going forward, this recent crackdown could actually be the best thing to actually happen to crypto because China was and is Bitcoin bear's best friend. Because as long as Bitcoin is mostly mined in China, where coal power plants account for most of electrical generation, Bitcoin will still remain dirty. And this will give the ESG fanatics, fanboys ammo to criticize Bitcoin. So basically, if China actually carries through with its Bitcoin mining ban, the anti-ESG case will collapse. Miners will easily find another place to mine proof-of-stake tokens. That is not a problem. So by doing this, it will reduce China's FUD. It will also help support the decentralization effort. Because earlier you said China mining pools controls almost 60-70% of Bitcoin supply. So in theory, 4 large Chinese mining pools could potentially collude to verify a fake transaction. But now moving these mining groups offshore, it will further promote decentralization and up the network security. So in any case, if you look at what will happen next, this move by China is unwittingly in the best long-term interest for Bitcoin in particular and crypto in general. And as Michelle said earlier, it seems like the market is starting to come around Monday. So you see this rally really picking up with a ton of coins making double-digit gains. It all seems like the algos just picked up on the big media headlines on Friday evening and all puked up, even though we all knew that this was not really any new news for China to be pulling at all. So you have a ton of Chinese investors exiting the market, some miners, but in the long run, this will be good. It will just take a few days to equilibrium. And if anything, these types of announcements, they're also a good indication that cryptocurrencies are starting to flare up in popularity and become a government threat. So these warnings, bans, regulations, they always start to come as it seeps into the mainstream in order to discourage change and more open adoption.
And now, Michelle, is this having any effect on equities as we see the sell-off going on, especially over the last week? You know, and now we're seeing markets up Monday. What's moving markets?
Well, I would say that there's a correlation, but not a direct impact, because last week the market ended on a high note, even though the cryptocurrency market was starting to flail. But I do think what is moving the market is, in spite of the fact that the dollar keeps going down to a point which really should start getting those inflation theorists out there, myself included, the digital currency situation is actually maybe calming things down, because there was a real threat to the world's reserve currency dollar status. And actually a representative from the IMF came out today and said a more stable world would happen if we have more than one stable currency, and he included alternative currency to that. So I just wanted to mention that as an aside. In terms of the overall market here, we have the yields down, the dollar down, a lot of big tech buying came in, and that really helped. We still want to see the small caps, the retail, and the transportation sectors lead this for a more sustained rally.
Boom Bust co-host Christy I and Michelle Schneider of MarketGauge.com. Thank you both for your expert analysis today.
Thank you.